Hello, everybody, and welcome to this episode of CFO 4.0. We're having a bit of a US themed session today. So, with me on the show today is Katrina Nacci, who is a cross-border accounting advisor. So, we're going to talk about everything to do with US GAAP and expanding into the US. So, thank you, Katrina, for joining me on the show.
Thanks, Anna, for having me. I really appreciate it. Looking forward to the chat.
Absolutely. So tell us a little bit about yourself, Katrina. How did you end up getting into the world of sort of cross-border accounting?
Sure. So I've been living abroad for the past 11 years. I'm actually originally from the Boston area, Rhode Island. If anybody knows it, it's the smallest state. So I started my career in PwC in the audit practice in Boston, focusing on tech companies. Um, did that for 3 years, but always wanted to live in Europe for a little while just to experience, a different culture, be able to travel, work in a different business setting. I was fortunate enough when I was younger that my parents took us on a couple of European vacations. So I just really had the itch to get back. And I was actually contacted by a recruiter to move over to Frankfurt, Germany, where I am right now, to work for a joint German US listed company. So I figured, you know what, I'll try it out for a year and see how it goes. So moved over to Frankfurt. I didn't know any German at the time or really much about Germany at all. Um, but it just so happens that here I am still 11 years later. So I actually spent most of my career with PwC. I was able to come back as a local hire in the Frankfurt office. Luckily, I had some connections to a partner out here who happened to head up the capital markets and accounting advisory function here, which ended up being just a perfect fit for me because they had this like specialist topic team that sits within that. That's Americans that are either local hires like I was, or people that just come on secondment for a couple of years and then go back to the U.S. And within that kind of specialist team, we were really focused on helping to take European companies public in the US or work on accounting conversions between, US and either IFRS or local GAAP when there were acquisitions taking place kind of across borders. So that's the bulk of where I got, my technical experience for what I'm doing now independently. And I was also able to go on secondment with PwC in that same group to Dubai for 2 years. So I was working on, capital markets and accounting advisory there, but obviously a different part of the world. So I worked on a lot of like local Middle Eastern transactions happening in the UAE or Oman or Egypt. A couple of UK facing as well, because they have a pretty close relationship, and then some US IPOs, of course. Um, and then before going into business for myself, I've been doing this for about a year and a half independently. I also spent 3 years in a private equity firm. There was a Toronto based firm that had just started to buy up assets in Germany, and they brought me in as their first European finance hire to basically build up the finance team out here from scratch. I put a team underneath me in Luxembourg, put all the processes, procedures together, and then we were very acquisitive kind of all around Europe. So I have exposure now as well to a lot of different statutory gaps. And now, like I mentioned, I've been working for the past year and a half for myself, specifically in that cross border niche. I see the combination of having the big four experience plus the hands on industry experience kind of gives me an edge, plus having spent so long, abroad with my ear to the ground on what's going on in the US. I kind of have this really, what I think is an interesting niche now for myself. So I'm really enjoying it.
And what do you see are the biggest challenges that country like companies face expanding into the US, particularly when they're coming from a UK or a European background?
I think it's really difficult because you don't know what you don't know all the time. So you're kind of going into a little bit of the unknown. And I see here in Europe, finance teams have really strong local accountants and they're very smart. And even can potentially, like if they were doing an IFRS conversion, just kind of run with it and maintain the day to day that way. But there's a lot of different nuances, not even just from a difference in accounting policy perspective, but just how it is to work with people in the US. And then, of course, if you're thinking about SEC rules, those are, another beast. But there's just a lot of kind of nuances, like I said, that you have to try to sort through if you're just, used to working as a local, European finance team.
So, can you give us an example of some of those nuances that you've people come across that surprise them, perhaps?
Yeah, I think that the big challenge, like I work with clients that could be either as small as potentially like a Series B scale up that's just on their first big fundraise round with US investors, and therefore needs to convert to US GAAP, all the way through, I'm working with a subsidiary right now in Austria of Intel, that because they did a stake sale, they had to do a full kind of US GAAP process, which they didn't have to do before because they weren't material for Intel at all. But companies on both ends of the spectrum, it's like a similar process that you have to go through to kind of get your head around like what are the differences and how you can do kind of that one time exercise to do the conversion, obviously, but then also make sure that the team understands what's going on in that conversion process so that they can take the converted numbers and then going forward continue to do the ongoing reporting. And I think that's where there historically, from what I see as a big four advisor, had been kind of a gap in that knowledge that companies tend to just go like ask their auditors for a recommendation when they're going through that type of conversion for like, hey, we need another firm to work with us. Can you recommend one? And then they get sent to another big firm. Um, but that firm will typically, come in with a swarm of people, kind of take everything off of your finance team's desk, do all their calculations and memos, et cetera, in the background, and then dump it back on you. Which there's certain pros and cons to that, of course, right? Like it's efficient from your perspective. You don't really have to have that much involvement. But if they're not like working shoulder to shoulder with you and you don't really see what it is that they're doing and they're not giving you that knowledge transfer and making sure that there's like an offboarding process to make sure that the team is kind of workshopped or whatever to like get all of that stood up and kind of integrated into your actual finance team that's going to continue that's where there's the challenge that I see personally in Europe.
And what is some of the key difference between US GAAP and UK or IFRS?
IFRS and US GAAP are more and more aligned. There's, of course, still nuances. Dealing with right now a company that wants me specifically to look at their share options because there's some differences in how you would potentially account for share options between IFRS and US GAAP. UK GAAP is another standard that I work in a lot because most of my clients, even though I'm in Germany, are UK firms for one reason or another. There's quite a few more differences, especially related to like what would be capitalized under US GAAP versus UK GAAP. UK GAAP doesn't really tend to capitalize much. So I had worked with a SaaS company last year that went through that process. And I think the biggest change or kind of shock for them was capitalizing their development costs as they're rolling out, new updates to their platform. They had never done that historically under UK GAAP, and it was kind of a struggle for them to go back to all the historical records for like what developers were working on what, to figure out how to develop that calculation. So that's one thing that I've kind of advertised like, hey, if you're even thinking about converting in the future, it's better to just make sure you have those schedules kind of set up and running in the background already.
So that's a great tip for those that are looking for coming up. Are there any other sort of big differences that if they're thinking about going for US GAAP that people need to be thinking about sort of early on, not just at the point that they decide to start converting?
That's a good question. I think just in general, I mean, maybe not a specific difference in terms of a line item on a financial statement, but just in terms of how you're carrying your entire finance function to make sure that, and this applies as well if you're going through an audit for the first time, for example, just to make sure that everything is well documented, that you have memos right now under your existing gap, that you have all of the right, subledgers and calculations, and it's not just a messy, back of the napkin thing that was thrown together. Because the more that you can do to kind of solidify how you're approaching your current gap, it's going to be much easier for an advisor to come in and kind of assess those differences and take you forward with that versus having to then just recreate it from scratch at that point in time.
Absolutely. And what are the you obviously mentioned the differences in how you capitalize. What about things like revenue recognition? How does that Is there a big difference between that for UK and US?
There's not big differences, to be honest, and I think that this is almost a little bit of what I mentioned before about like you don't know what you don't know. So,
Yeah,
I've had companies to me come to me to say, we're going through a gap conversion, but our financial statements are pretty simple. So, we don't want to spend a lot of money because we don't think it's overly complicated. And I think the problem with that is you need to be able to still demonstrate that you've taken your entire chart of accounts, gone line item by line item to kind of classify, like, okay, these are all the accounts that roll up into revenue, and then look at your detailed, the nature of the transactions and your detailed transactions that are going through those, and kind of make sure that your current policies actually cover everything and that you're going through each step of the IFRS or UK GAAP or whatever for, the initial recognition, subsequent recognition, etc., and kind of outlining that. And then at that point, you can come in and you can look at what US GAAP says, and probably there are elections that are going to help to kind of keep you closer to what you're already doing. But if you don't go through that full exercise, it almost doesn't matter to say kind of top of mind, like, okay, this is the specific difference. It's really just how you approach that entire exercise to go through and assess, like, have I looked at every single potential difference? Because your auditors are going to want to see that you've done that from a completeness perspective. So maybe that doesn't answer your question directly, but I just think that sometimes when people ask those questions, it would be a little bit too simple to answer it, to just say like, oh, this is probably the difference for you. It's just the fact that you need to kind of go through that entire process.
yeah, it's broader obviously than capitalization and just rev rec. There's a
Yeah.
lot of elements that need to do, because one of the things I've often experienced with UK and UK companies moving or opening or working with a US acquisition is the change in the types of rev rec they do. So I very often in the UK you'll do monthly rev rec versus in the US they tend to work to like daily based rev rec. So I was just interested to know if that was
Mhm.
like a common difference that you had seen.
I think what you're talking about is more, a lot of that is not necessarily written in stone in terms of the
Mm.
accounting principle itself for like monthly versus daily, for example. It's more the fact that when you're converting to US GAAP and going through an audit under US GAAP, typically the audit materiality becomes a lot lower. So there's just like the degree of accuracy to which you're calculating those things needs to potentially get improved, but that's not necessarily a difference between the standards. It's just because your auditors look at it kind of from a different lens.
That's really interesting, Katrina, in terms of, like you say, it's the perspective versus the actual guidance and rules necessarily. Um,
Yeah.
so let's just talk. We're getting very much into the technical details. So let's just lift
Yeah.
out and talk about the process. Sorry, I'm a finance geek, so I love talking
I
about this kind of
appreciate
stuff.
that.
I live
So am
this.
I.
So I apologize to anyone listening. This is like, yeah, Hannah, you're going a little too deep. So let's just talk about the process of converting, perhaps from UK GAAP to US GAAP. What does a good process look like for an organization? What are the sort of steps that you need to be following?
Yeah. Well, like I mentioned before, it's really just to show that you've looked at your full chart of accounts so that you can demonstrate kind of completeness of every single difference that may exist. And a lot of how I recommend my clients to kind of set up going through that process is to make sure that there's a good audit trail as well for what you're doing, because eventually you're going to end up probably having to have an audit under US GAAP. And like I said, it's a little bit more of a fine tooth comb microscope situation. So there's a kind of a three-phased process that I typically follow. The first is to go through, discovery, get a hold of the chart of accounts, the financial statements, whatever, memos, calculations, et cetera, that kind of support what you're doing under UK GAAP, for example. And that goes back to kind of what I said, to just make sure that all of that already exists, because it's going to make it a lot easier for somebody like me to come in and help you with it. Um, Part of that is still potentially sitting in calls as needed to kind of walk through the process if it's not documented, but it's a lot easier when you can do that on an async basis, because I do like to kind of work in the background where I can and not disrupt your day to day too much. So kind of going through that discovery and figuring out what are the qualitative differences that might exist in the policies, So that would involve, like I mentioned, pulling out the chart of accounts, going line by line to understand the nature of the transactions in those accounts, and then kind of rolling them up to the broader, okay, revenue, cost of sales, intangible assets, etc. And then having a matrix that shows each line item of revenue, cost of sales, intangibles that exist on your primary financial statements, and say, okay, for each of these items, this is the detailed policy kind of step by step under UK GAAP that we're following right now. And then this is the suggested US GAAP policy, because like I mentioned, there's probably going to be, somewhere in some of those policies, elections that you're allowed to make. There's a lot of elections under US GAAP. Um, and that typically works to your advantage because you can try to make those elections that bring you closer to what you're doing so you can make as few adjustments as possible. And then alongside that matrix, obviously, elaborating on these are the specific differences. And this is kind of the process that you would have to go to evaluate those differences within your subledger files. And then also helping you to kind of qualify based on either level of effort for assessing those differences and overall materiality to the financial statements. Kind of what's your high, medium, and low priority to go in and like attack each of those line items. So that phase one would be like the qualitative assessment piece. And then phase two would be the quantitative assessment. So wherever there are differences identified, to go into your subledgers, supporting files, whatever you're keeping, and kind of figure out how to adjust the calculations or schedules to be able to show you a new US GAAP number, and then kind of compare that to what the old UK GAAP number was. And that's basically your conversion adjustment. And then the third step is the preparation of the financial statements themselves, obviously. So plugging in all of those conversion adjustments, normally to some sort of, if you're using an ERP, like you set up a separate ledger or a separate entity to just hold those conversion adjustments. So you can take your, UK TB and add your conversion TB to it and come up with a US GAAP TB at the end of the day. And then prepare, the primary statements and all the footnote schedules as well. And even though, typically when you're going through that for the first time, unless you're doing it as part of going public in the US, you're probably not at the point where you need a full set of like SEC proofed financial statements, because they have even their own kind of guidance and standards for what needs to be in your notes and like how specifically you need to disaggregate each of your individual line items. But kind of setting that aside, if you're just implementing regular US GAAP for a non-public company, there's still ways to kind of look at what your peers are doing that are public and just make sure that your policies are aligned with them and you're kind of disclosing your transactions and your notes tables similarly, even though in some cases they're probably doing it in even more detail because they're listed companies. But just kind of having the ability to pull up some peer statements and benchmark against those, which is part of my process as well. I use some expensive software for that. So that's kind of the three-phased approach: is the qualitative differences, the qualitative calculations, and then the financial statement preparation.
And typically, those three phases, how long do they take?
It could be anywhere between 2 to 3 months, 2 to 4 months. It really depends on the complexity of the company. And like I said, the information that they already have available. So it could, if they really have nothing, then it could take, potentially 6 months to really figure out what they're doing if it's something overly complex, and like confirming things with them if, the team doesn't really know. So it's also depending on, the skill level of the local team and how quickly they can kind of help assist in that process. Because like I said, a lot of what I'm doing is the knowledge transfer at the back end as well, to say like, this is the process that I'm following, confirming along each step of the way that what I'm writing down is actually correct and what's happening at the company. So there's kind of a lot of factors that go into it from a timing perspective. And it also depends as well on how much support you want and need, and that could be in terms of the availability of your internal staff, and more importantly, your budget. So sometimes I have companies come to me, um, and they don't have like a huge budget for this exercise, where I'll come in and say, like, okay, well, I'll just help you assess the qualitative differences, um, and give you that matrix. And then you can run with it and do the calculations and prepare the financial statements yourself and potentially, layer me in as kind of an advisor to review those. But that way it's like, again, it helps from a knowledge transfer perspective, but then it also helps me kind of reduce my fee. And so everybody kind of wins in that situation, I think. I mean, that could then extend or, uh, make shorter that time frame as well, depending on, how available they are to work with me alongside that process.
And if you talk about the skill set that if you had to pick your ideal client, I know we can't always do that, but what sort of skills would you have in that team that you're working alongside ideally?
So an ideal client for me would be, like I said, a European company that is going into the US. It could be that they're just going through their first fundraising round. It could be that they're getting acquired by a US company or they're getting ready to go public in the US. And I try to focus in like the tech, biotech, manufacturing sphere, because their financial statements in each one of those industries looks kind of similar. I mean, there's differences in SaaS companies versus fintech companies, but they're similar enough that it's easy for me to kind of refine that process. Um, but I guess the biggest thing that I would look for in terms of somebody that I would want to partner with and help them through that process is, like I mentioned, that the skills of the local team, they don't have to have any understanding of US GAAP or even IFRS if they're not yet there. But it's more just being humbled to say, like, yeah, we don't know what we don't know. And so we want to work alongside an expert. And they also need to have, at least 2 or 3 people in their finance team. It doesn't have to be huge, Series B, they're not going to have a lot. On the other side of it, a bigger, Fortune 100 company obviously does. But because I'm not like an interim solution for either a CFO or a controller position, they still have to have kind of those types of ongoing resources in house. And I'm just kind of like the project accountant person. So that's kind of where I would fit into the equation.
And we've talked a lot about sort of the adjustments and how the policies vary across UK and US. What about the actual reporting that needs to be put forwards? Like, are there any other compliance requirements that people need to think about as they're going across the
Yeah.
ocean and into the US?
It really depends on why you're going into the US. So if you're doing it because you have investors in the US, private equity, venture capital, for example, it's probably just in the investor agreement that you need to produce financial statements under US GAAP. Like I said, you probably would then also need to go through a US GAAP audit, which is in and of itself a compliance exercise. Um, if you're getting acquired by a US company, if they're public, then obviously your parent company is now a public company and you need to be able to report like a public company in the US. And similarly, if you yourself want to do an IPO in the US, you're going to be public in the US. And then that comes with, of course, a lot of its own compliance requirements in terms of, the number of times you have to file with the SEC every year. Obviously, your audit becomes even more kind of strict and microscopic at that point because you're going through a public company audit. And then there's a lot of other compliance exercises around, your internal controls and processes, procedures that those in and of themselves will get audited separate from your financial statements. And then you've got kind of corporate governance as well, depending on what where you're listing. So that becomes, I mean, then there's a lot of kind of compliance nuances to pick through, and that's also depending on whether or not you meet certain kind of exemption and different classifications that the SEC uses for public companies. So a lot of companies in Europe will meet kind of a foreign private issuer exemption. So they are able to use IFRS instead of US GAAP, for example, and they can report. They have a longer time period to report and they don't have to do interim reporting. So things like that, to just know and have an advisor kind of working through you on those aspects, definitely helps kind of ahead of going through those transactions, just so you make sure they are not doing unnecessary work because you qualify for certain exemptions, but making sure that you kind of are ready to go public when you want to push that button.
No, that's really interesting to understand. And you mentioned obviously you might need to be audited under US GAAP. Like, is there a big difference in the US audit process versus UK or Europe?
Um, yeah, I think just in general, the mentality shifts a little bit and it is a little more like a fine tooth comb. Like I said, like the materiality will typically be lower in the US. Um, and also the way that they approach just getting an overall understanding of the company changes a little bit. They'll do more thorough walkthroughs. And even if they're not issuing an audit opinion on your internal controls, they're still going to do a more thorough review and potentially even test them so that they can, test that your controls are working and then do less work on the transactions themselves. So those kind of things, there's nuances in how those would change going through a US GAAP audit.
And in terms of timings, do US have a with the audits? Does it happen in a similar sort of fashion and timing differences? Like, is there anything there that people need to think about? Like, could they be going through a UK audit and a US audit at the same time potentially if they're not careful?
Yeah, yeah. So, if you're not a public company, then it kind of depends on what your investor requirements are. So, for
Yeah.
example, let's give this example because it's very top of mind, and I actually have a call with auditors later today. It's with an Austrian company, not a UK company, but a similar kind of process. Um, so they have to go through a first time US GAAP audit that has to be done by the 30th of June. And they're also going through a local audit in Austria. And normally that audit, you would have a longer period of time to complete it. But because, like I said, the US GAAP audit is kind of over and above what they've historically been doing, we've kind of pushed back on their auditors to say, like, can you reassess your timeline and come in a lot earlier to do, as a first step, the local audit in Austria, and then using the basis of whatever transaction you've already tested in Austria, then just layer in based on the conversion trial balance, to do the rest of your testing under US GAAP to actually like test those conversion adjustments, and then also to go back because of a lower materiality and like retest or make new samples for whatever you would need to test additionally. So that kind of helps you to align it and make sure there's not double work, or you get through a US GAAP audit, and you have adjustments that you need to make to the local gap or vice versa, so that those financial statements end up being kind of consistent as they can at the end of the day.
No, absolutely. So we've talked a lot about sort of going through the gap process, but one of the things that we sort of mentioned on and off is actually going through a funding round potentially with a US equity organization. So just tell me a little, does how important is the knowledge around US GAAP sort of pre funding round for investors? Have you ever seen it come up where it's actually been a sort of almost like a decision point or a factor that impacts either the willingness of somebody to invest from an equity background?
I think it probably would depend on the sophistication of the investor rather than your company. And so that would be kind of hard to understand how you would need to prepare from a company perspective. I think, like I said, the more that you can do to familiarize yourself, the better. Because I've seen both ends of the spectrum. I'm typically coming in after a transaction has already closed, after there's already been a fundraise, and then the CFO comes in and says, like, hey, we just closed this. We've got these investor requirements. Now we need to do a gap conversion. And in a lot of cases, the investors have been okay with whatever you've then shown them, obviously, during due diligence in terms of your statutory financial statements. But I still think that if you want to be as proactive as possible, you should be doing at least part of the process before that transaction closes. And I'm not saying you need to go through and already prepare full US GAAP financial statements, But at least what I mentioned in terms of like having that matrix of your current gap, your US GAAP, and what the differences are, and even at a higher level than like going through in detail, having that pulled together before you go through due diligence, I can see would really help the process in terms of being able to show the investors that you understand it, even just kind of from a qualitative, aspect of their investment. But also because then they could take that and kind of do their own calculations if they want it at a high level to make sure they're doing like an apples to apples comparison versus, apples to oranges because you're under two different policy standards. So that's what part of like what I'm doing right now is a lot of education, LinkedIn posts, et cetera, to kind of help people understand that they may want to be proactive in their fundraising approach so that they, likely have access to a broader range of investors if they have that prepared. Um, Even the work that I'm doing with, like I said, this Fortune 100 company, they have their own M&A integration accounting team, and so they were able to do that high level comparison beforehand. But even then, when they realized that there were differences, they needed to give their Austrian team some support that they didn't have the capacity internally to provide, and that's where they turned to me to say like, hey, can you just work alongside that now that we've kind of done the high level assessment before the due diligence and make sure that they can stand everything up in terms of all the documentation that they needed.
I guess in terms of going through, when we go through, what are some of the common, or is there any particular issues that you've seen with organisations where there's been a big barrier in the conversion to to US GAAP, and typically how much how far back do people need to go in terms of almost like retrospectively converting to US GAAP?
Yeah, the retrospective conversion will depend on what you're using those statements for. So if you're planning to go public in the US or you're getting acquired by a public company, depending on how material you are to that public company, you will need to show probably 2-year comparative financial statements. So, if you're doing it now, for example, you're doing the conversion not only on the FY23 results, but also FY22. So it's, again, in terms of timing, that obviously affects how long it takes to go through the conversion if you have to go back in history further. So that's something to kind of keep in mind in terms of just making sure you have all of the documentation together for both of those periods. Typically, if you're doing a fundraise in the US, it will depend on what the investors want to see. And that's more of just making sure that you're proactively having conversations with those investors for what it is that they want. Do they want, almost the hardest situation would be if they want financial statements starting as of their date of investment, because then that's likely like a weird interim period that you have to figure out like what's your opening balance sheet. But maybe they just want them for like one fiscal year, maybe they want them for two. So there's a lot of room to kind of play around with how you do that conversion. Um, and I will say as well, because I don't think I've mentioned it so far, and it's an important point, is that aside from being proactive internally and being proactive with conversations to your investors, I think it's also worthwhile to be proactive in the conversations that you have with your auditors to say, we need to go through an accounting conversion. These are the documents that we're planning to prepare as part of that. Like I mentioned, the matrix, the financial statements potentially kind of slotted in there as well. You may need individual memos on more significant topics like share options, revenue recognition, for example. So just making sure that you're aligned on like, this is the process we're going to follow, and these are the documents that are produced at the end of it, and just make sure that the auditors say like, we're okay with that approach to go through the conversion audit itself. Because that's something that you don't want to have as a surprise when you're getting through that process to say, like, oh, we didn't prepare this initially, and now trying to go back and replicate it can be difficult.
Yeah, so wherever possible, a bit of future prep is good. I think that's always the challenge, especially with fast growing. Like we work a lot with SaaS, and the speed at which these kind of things seem to happen is a lot faster than it is in sort of most other industries. It tends to happen quite rapidly, and they don't always.
Yeah.
Everyone's just trying to deal with what's there today rather than thinking ahead of what's coming. So I guess that's the big shout out, isn't it?
Yeah, for sure. And I see that a lot because, the work that I'm doing and how I'm connecting with people, it might not be that they need my help immediately because a lot of my work is very transaction based. But even just having those connections, I've been chatting now for the past year or so with a finance director of a UK public company. It's a fintech, and he's like, "Yeah, we know you as the US GAAP person. So if I hear of somebody, I'll refer you," kind of thing. And then he came to me all of a sudden a couple of weeks ago and said, "Oh, by the way, we just found out that we're launching a subsidiary in the US, and because they're fintech, they're regulated from day one and need full US GAAP right off the bat. And so they wanted to kind of understand their options to go through a GAAP conversion and get some training for their team." So he's like, at the end of last year, I didn't even think we were going into the US, and now we need this help. So yeah, like that, like you said, you never really know what's going to come up. People kind of change their mind on the strategy along the way.
Yeah, no, I just think that's part of the course with SaaS. For I think it's just because it's such a fast growing industry, and like you say, fintech adds a whole new layer because of the compliance
Yeah,
and regulation
right.
requirements.
Yeah.
So, and what are the typical, like, when again talking specifically about fintech? What are some of the differences from that perspective? What are the additional regulations you need to think about when you're going into the US?
Yeah, I would say that they're still pretty consistent in terms of like if you need to do US GAAP, then you need to go through a GAAP conversion.
Yeah.
The From the different fintechs that I've talked to, they may, depending on the type of fintech they're in, they might be regulated either by the individual states, which then certain states have US GAAP requirements, or they might be regulated by the SEC because they meet like this investment management act that the SEC has. And then they're, doing US GAAP. Basically, at the end of the day, it's just really important. And I think that's more of like working with your lawyers at that stage to understand um, where you fall into in terms of the regulations, and that you can kind of stay compliant with that. And that's been a really interesting thing that I've just seen pop up even in the last couple of months from conversations that I've had. Because normally when people come to me in other tech companies and say, "Hey, we're just setting up a branch or a subsidiary in the US, we know you do cross-border accounting, can you help us?" 9 times out of 10, they don't really need my help yet. What they need when they're setting up a US subsidiary is really just like bookkeeping and tax prep work. Because they're basically doing like GAAP under the IRS rules as opposed to like actual US GAAP, because the tax accounting is different. So I'm happy to like stay in touch with them and refer them to people in my network because I know a lot of people in the cross border space. But they wouldn't necessarily need my help just day one setting up the subsidiary, unless it's part of a bigger plan to, do a Delaware flip and then IPO in the US, for example. But in the fintech world, that, like I said, is very different because it's like day one of being on US soil and you already have all of these requirements. So that's a really interesting space, and I'm trying to have conversations with more people in that world right now because I think that there's more and more regulations that are coming into effect there.
Now, I've realised that we're rapidly running out of time here, Katrina. So,
Yeah.
and this has been such an interesting conversation. So just to wrap up, for those that may be considering going, or the need for to shift and or do a conversion to US GAAP in the next couple of years, perhaps they're looking at investment rounds with US investors. Perhaps they're doing it in different ways. But talk us
Mhm.
through. So, what are the things that they should be thinking about now, and that sort of lead up to actually having to do that US GAAP piece?
I think the first thing, which I've already said, but I will just reiterate, is be proactive internally where you can. I don't think it makes sense for you to spend the effort to go through the gap conversion if you don't have that requirement yet, but just do as good of a job as you can, just documenting what you're doing under your current gap and making sure that that's kind of done and dusted, so that when you do have to go through a gap conversion, that it's kind of setting the tone for that. And also just in terms of the strategy for going through the gap conversion itself and how you want to work with an advisor through that process. Um, there's a lot of education that I'm trying to do here, that there are other ways of working with advisors than just going to a big firm that your auditor refers you to. And I think especially for scale up companies that are doing fundraising, they don't necessarily have the budgets to be, engaging with the big four either. So I think just the main thing is really understanding the strategy for, okay, how are we going to go through each phase of this gap conversion? And what do we want to try to do in house versus have somebody help us with? And at the end of the day, after this gap conversion is done, how do we make sure that our local team understands everything that happened so that they can go through the audit afterwards? And how will they kind of maintain the conversion ledger as well? And I think that that's um, potentially a gap that I see, that that companies just really rely on a big firm, and they think like, oh yeah, we've checked the box, we've engaged somebody to do our gap conversion, we don't need to think about it again. And I think if you spend a little bit more time on the front end of that, just really analyzing that strategy, that you'll realize that you have different options for how to like layer advisors into that process.
No, absolutely. Well, I see it a lot as well because obviously with tech, where people just rely on external consultants, and then the consultant moves away, and you've just got this
Yeah.
gap of knowledge that sits within that team. And I'm a big
Right.
believer in enabling and building knowledge sharing, and like you say, the knowledge transfer
Right.
piece. So
Yeah. Yeah. And that's actually something that I'm exploring a little bit more. I mean, I'm like I said, I'm a little bit more nimble and flexible than bigger firms, but I also like to experiment with different offers. So one thing that I see is a gap still is that even after a company will have kind of that ongoing US GAAP or even IFRS reporting requirement, um, they'll still kind of run with their local team through that process. In which case, they kind of understand and can do the adjustments day to day. But if there's a new transaction or a new contract that got signed, or there's a new accounting standard, they still might kind of be shrugging their shoulders, like, what do we do? So I'm trying to also, I see that as a gap, that it's very hard to find people in Europe that have strong US GAAP backgrounds. And so I would say in that situation, stick with your local team if they're strong technically from a local perspective. And then if and when you have questions, work with somebody like me as like an ongoing fractional chief accounting officer almost, to be able to kind of just bounce things back and forth and not have to go and try to find somebody with US GAAP experience in Europe, which is very difficult, or hire, somebody in the US, which is very expensive. I think that there's ways, again, like I said, to kind of layer in those experts. So if you're just strategic about it and how you want to staff the team, that's helpful as well.
no, absolutely. And if obviously this has been really useful, and like I said, I'm a bit of a finance and accounting geek, so I found this kind of stuff super interesting. So thank you again, Katrina, for coming on. But if our listeners have also found it interesting and want to learn more about you and also the services you offer, then where's the best place to find you?
Yeah, so I think the best way to start is just to get a little bit of education to understand, when you don't know what you don't know. I've developed a very comprehensive Notion guide that I give away for free, that you can kind of self-select why you might, need help going from Europe to the US, whether you're doing a fundraise, IPO, acquisition, etc. And then kind of click through that to see like, okay, I'm doing an IPO. Do I need to consider doing a gap conversion first? This is kind of the process to go through, and there's some checklists and timelines as well. So I find that that's helpful before I even have a conversation if somebody needs more support, just so they understand what they're kind of getting themselves into, more or less. So would be happy for people to kind of go to that guide. They can find it at www.theinternationalaccountant.com. You can find the information there. If you need to reach me, my email address is there as well. You can kind of, like I said, click through and do a little bit of self education first.
Brilliant. And for all of us, all of those listening, don't worry, we will put that link in the show notes. So it's super easy for you to get access to and find that. We'll also pop in a list of Katrina's, a link, I should say, to Katrina's LinkedIn as well, so that you can see all of the great content and things that she's talking about there as well. So thank you so much, Katrina, for joining me on the show today. And thank you to our listeners. If you have enjoyed this podcast, guys, as always, please do leave us a review, like, share it, and tell us what you've enjoyed, because again, we love the feedback. So thanks again for listening to the show. Thank you, Katrina, for joining me. It's been so great to have you.
Thank you, Hannah. I really appreciate it.